Hello and welcome to Wisdom Bites. Hope you're well. Thank you once again for joining us. Very much appreciated. And in today's program, I'm going to be having a look at the main theme of the video, and that is a particular Bitcoin chart pattern that seems to be repeating from the last cycle of the 60-day cycle. And I'm going to have a look at what that chart pattern is predicting. So let's see if it's going to play out in this cycle, what was happening in the last cycle. And I mentioned this in last week's video, and it seems to be continuing to play out in a similar way. We're also going to be having a look at the rundown on the various timeframes to give a bigger overall narrative of exactly what Bitcoin is doing in the bigger picture for the short term, the medium term, and the long term. And as per usual, we'll have a look at the 60-day cycle and share my strategy going forward. So if that sounds interesting, you know what to do. Get yourself a cup of tea, sit yourself down, eyes on the screen, and let's get cracking. But before I begin, the usual polite reminder, please remember everything in my videos is just for educational purposes, so please always do your wider research before you make any investment decisions or any swing trade decisions. Okay, so we'll go straight into the main theme of the video, and that is a particular chart pattern that seems to be repeating. Well, we all know that nothing repeats, but it does rhyme. So it's a pattern that's rhyming currently, and what I'm really talking about is the 60-day cycle. The current 60-day cycle seems to be resembling the last 60-day cycle. And here is this pattern. So these are the two cycles now. So the last 60-day cycle began here on the 5th of June, and the current one started here on the 3rd of August. Both of them had an end of the previous cycle on day 59. But what you can see is a particular pattern developing. So in the previous cycle, what we had was a day 4 high here, followed by a rundown into retesting the bottom of the start of the cycle. And so far in this cycle, we've had a very similar start, and that is from the start of the cycle, we've had, instead of a day 4, we've had a day 11 top here, followed by the same pattern all the way down to retesting the start of the cycle. And this candle here yesterday protruded below the low of the start of the cycle. So technically, in cycles terms, this is a failed cycle. But as you know, my definition slightly varies to the classical charting view, and that is that as long as we don't close the candle here below the low of the cycle start, then I think we're still good to go. And this is exactly what happened here. While everybody thought this was a failed cycle and they were expecting this to go much further, but in the time band that we're in, at the end of a 4-year cycle, you would expect a lot more bullishness. And these things here, where they're going below the start of the cycle, to be bear traps. And this looks once again like a bear trap, and we won't know this until today's candle, Monday the 25th of August. If this closes below the start of this cycle, then it really is a failed cycle, and then the probability then shifts more to the downside rather than a big bounce to the upside like we got here. So this is what we can expect if it doesn't get into a failed cycle state. What we got in the previous cycle here was a big surge all the way back here, and this was really a bear trap. It left everybody behind expecting this to go much lower. And this is what it's doing here. And the good sign is there are a couple of positive signs on the chart, which I just want to highlight, which are actually saying that this is what it's going to do, just like what it did here as well. And those two signs are, firstly, the Sunday candle close. While it protruded below the start of the cycle low, you can see that it's leaving a long wick. It would have been better if it had closed around about 115, but it actually closed at 113. However, it did leave a nice wick there, which means that it was bought up very quickly. Now, the only downside to this is that it was a Sunday candle, and if you look at the volume would have been quite low. Because it was Sunday, the volume here is not really very high. As you can see, the Monday to Friday volumes are much higher. So that reduces the weight of this candle. However, there is a second sign, and that is that if you look on the RSI, while we made a lower low here on the price, the RSI has actually made a higher low. So what we have now is a normal bullish divergence. And what we know with these divergences, just like this hidden bullish divergence here, and on Saturday's video for the private members, I was trying to explain exactly what the difference is between the normal divergences and the hidden bullish divergences. Just understanding these can actually make you a very successful trader. And you can see how these play out very well, because from this point where there was the hidden bullish divergence, which was the midpoint here, the price ended up with a higher low while the RSI ended up with a lower low. And what we've got here currently is the reverse of that. So instead of a hidden bullish divergence, what we've got is a normal bullish divergence. This is where the RSI, the momentum, is saying that the momentum is now picking up while the price has overshot itself. The RSI is giving us a completely different picture that this is what it's more likely to do. So it should follow the same pattern as here. And where we get into the mid-cycle, which is going to be the first week of September, we can expect some sort of a consolidation like this. And it's really the second half of this cycle, which ends in the first week of October. This is where really the fireworks should start. If we can get ourselves anywhere around this level here, around the 120,000 in the mid-cycle decline of the cycle. Always remember the mid-cycle, you always get some sort of a decline, and this is what we got there. If you look in history, you'll see that most of the time you get a mid-cycle decline. Sometimes you get an early mid-cycle decline, but this white line here, you can see there was another decline there. This one here was a bit of an anomaly. We actually went strongly into it. That's because there was so much momentum, it was wanting to put this much higher. So the probability is we're going to be faced with some sort of a mid-cycle decline. And then depending on what happens there is what's going to really determine the second half of this current cycle here into October. And what is really going to be interesting is actually going to be what happens after October, because in October we should be getting the new 26 weekly cycle. So because the weakness we're getting currently is because the current 60-day cycle is a third of the 60-day cycle, which is contained within the 26-week period of the 26-week cycle. And usually in the new 26-week cycle, we should get a bullish cycle. And this is where we would expect some fireworks, because when you get to October here, depending on where we are, and because of the time band of the 4-year cycle that we're in, we should be around about this level here, anywhere between 117, 118 to 124,000. So this is where we will really want to get to when we get into this space here. And that's because the first 60-day cycle of the larger 26 weekly cycle should be a bullish right translated cycle. So we should see a real challenge of getting above the 124, into the mid-cycle. That's going to be at the beginning of November. Expect some pullback into the mid-cycle, and then this may well be the blow off top anywhere between November and December. If the price is going to follow the traditional 4-year cycle, this is what you would expect. But if this doesn't happen, then we're talking about an extended cycle into 2026. So these are just some of the insights of what we can expect going forward on the 60-day cycle. And this is the weekly cycle, which started here at the low of 74,000 in April. And I've marked the 3 60-day cycles that you get in between the 26 weekly cycle. So the start of the 26-week cycle was here. The end of the 26-week cycle is going to be approximately here in the first week of October. Then you get these 3 60-day cycles. The first one was this one here, second one, and then the third one up to October. So this is the third one that we're in now. So in terms of the weekly cycle, from the beginning here to the end, this was the midpoint, and you can see we've already got a right translated 26 weekly cycle. So what we're really getting from this point of view is that from the midpoint, we are getting this decline. Then after a period of bullishness, which is what we got here, then towards the end of the cycle, in a normal 26-week cycle, we get the end of the cycle decline. Sometimes you get it a little bit earlier, of course, but the expectation is still that third of these 60-day cycles, this is where we're at the moment, which I've just shown you on the daily cycle. But in the context of the weekly cycle here, we could get that bounce before the end of the cycle decline as we would expect. And this decline is going to be very key. As long as it's going to be anywhere around the 120,000, then it sets up the next 26 weekly cycle with an incredibly bullish outlook. Like I showed you here, the first of the 3 60-day cycles, this is what we can expect over here. So this is where the fireworks should start anywhere from October onwards. And this is really not where you want to be out of positions. Even here, this is really a time to accumulate rather than a time to actually relinquish your positions. So that's where we are on the weekly cycles. And continuing the theme from last week, when we had a rundown of the various time frames for Bitcoin, if we look at the monthly time frame, as I mentioned to you last week, this particular candle is still looking highly bearish. And we know that this kind of a candle, what the power of that is, and it can really bring the price down. So what we really need is to make sure that this candle does not close anywhere where it is now. and we've got around about 6 more days to go. We really need to change the shape of this candle. Otherwise, we're going to get at least 1 month of a red candle down here. And that can be anywhere to the bottom of the previous candle, which is around about the 105, 106,000. So this is a possibility still, which obviously means that we're going to get a failed current 60-day cycle, as I've just shown you. And one of our Bexit indicators that we're looking for, some sort of a sign when the bear market will start, is this blue line here, the 8 EMA. As long as we are still above the 8 EMA, which currently at the moment is at 101,000, as long as we're still closing above here, the trajectory is still to the upside. But once we close below the 8 EMA, that's when it's time to be fearful. And in the time band of the 4-year cycle we're in, any close now below the 8 EMA would be a deadly sign, and people will have a decision to make. And on the weekly time frame, as I mentioned 2 weeks ago, we closed this candle here. As I mentioned in last week's video, this was a very dangerous candle, and that we were going to get between 1 and 3 weeks of a downward pressure. So we closed the candle yesterday with this red candle. And currently we're on this one here, of course, but it doesn't have to finish this way. We're only on the first day of the new week. So this can still turn into a green candle, which would mean that this bearish looking candle will have played out by at least just 1 week only. But of course, this can go further down to the low of this, around about the 106,000. So this is really where we're finding support. If you look at the tops of these candles here, we're right at the support of the resistance here. And it actually looks quite bullish from a charts point of view, in the sense that we came up to this level of 110, 111, got rejected multiple times. But once we've now got above it, all we're doing is, on a multiple time frame, we're coming back to retest that as support. And this in classical charting is actually very bullish. And this should be the springboard for the higher moves to come. And the two key moving averages are the 8 EMA, the blue line, and the 21 simple moving average, the yellow line. And we seem to be getting a very similar pattern to what's happened here. We're coming back to the 8 EMA. We've dropped out of it from yesterday's weekly close, just like we did there. But the following one, and we've seen how the patterns do tend to rhyme with the previous ones, that this one here, this candle here, could quite easily turn into the green one, resembling this one at that point. So we can expect this to happen, and only time will tell. And the safety net is really provided by the 21 simple moving average, and that currently is at 108,000. So there is a possibility that we're going to tag the 21 simple moving average either this week or possibly next week when it moves a little bit higher. So we're still really seeing this particular weekly candle playing out, maybe until we tag this one here over the next week or two before we get the big bounce. But certainly from a chart point of view, the bull market is still very much intact. And I'll also show you the daily time frame through the eyes of the 60-day cycle, because there is something quite interesting which developed on the Bollinger Bands, and that is that the previous cycle bounced off the lower Bollinger Band here towards the top. Similar thing happened here. We bounced from the bottom level here all the way to the top of the Bollinger Bands, protruding both sides. And just like when we came back here and found a bounce off that, this is exactly where we are. So the Bollinger Bands would suggest we're going to be bouncing from here. And the top of the Bollinger Band at the moment is at 121,000. I'm not saying that's where it's going to end up. We could quite easily, just like we got rejected on the 21 simple moving average, the price could come back to around these levels. It's flattening this line here, the 21. So this is actually a key level at 116,000. So we could quite easily get a very quick bounce into 116 like we did on Friday. But if we were to actually punch through that, then the Bollinger Band should be around about the 120, 121,000. And that would be a natural place for a mid-cycle decline. A lot of people ask about the strategy. I can only share with you what I'm doing, and that is that I'm using these dips as an opportunity to buy. Because if you take these dips as an opportunity to buy, if you go all the way back here, whenever there is a dip, you can see here, when you get to the end of the cycle, you usually get a good bounce, and we're still making the trajectory to the upside here. So the chances are, the probability is, and everybody can make up their own mind, the probability is that we're going to bounce from here. Even if we go down below to 106,000, this is still a nice place to dollar cost average at a lower level and then try and get a run into the end of the bull market. And if you've been watching my channel for a while, you'll know that the overall strategy we've been following on this channel since the price of Bitcoin bottomed out at the end of 2022, we've been following the strategy of trying to capture the whole of the 4-year cycle. So this is where the market for Bitcoin bottomed out at the end of 2022, and since then, here at Wisdom Bites, we've been running a portfolio in order to capture the whole of this 4-year cycle from the start to the finish. So we're only hopefully, if we are going to have a blow off top towards the end of the current 4-year cycle, if that is what we're going to get, then we've only got a few more months to wait, and that should be the end of the current portfolio that we're running in the private member section of this channel. And you can see these monthly candles, the size of these candles does not reflect what has happened towards the end of each of the previous cycles. So you can see when we got the double top, the first top had quite a lot of sizable monthly candles, and even the one that topped out here 1 month before, we got a sizable monthly candle. That was in the last cycle at the end of 2021, and at the end of 2017, once again, you started to get sizable monthly candles. These are your blow-off tops that you would normally expect at the end of a bull market. And even in the first cycle, you can see the size of these candles were even bigger, right into the last ones at the end of 2013. So this is what you would expect. So you can see quite clearly, just by visually looking at the size of the candles, that we aren't at the top yet. We still need 1 or 2, maybe 3 or even 4 large sizable candles into the end of the bull market. And as I say, if we continue these smaller candles, it obviously gives the sign that we're going to be extending the current 4-year cycle well into 2026. And for those of you who are interested in the portfolio, which we started at the beginning of 2023, on January the 6th, we started with 100,000, and we have 2 portfolios running there. One is a passive portfolio where we just chose a series of Bitcoin miners and just left it ever since then. We've not touched this portfolio at all, and by the end of 2023 we'd got to 434,000, so that was a near 300% increase. And since then the passive portfolio has gone up to 508,000, which is nowhere near our target for the end of this year of 5 million. Now this may seem rather high, but those of you who know about the Bitcoin miners, you know that within about 2 or 3 months, they can 5 and 10x very, very quickly. I'm not saying it will do that, and the probability at the moment would seem that it's not going to do that. In the past, it has done much better than even 5 or 10x. So everything is possible, and we remain optimistic, but we always keep an open, fluid, and flexible approach. Let's see where this portfolio goes. Even if it goes to 1 million or 2 million, that would be a really good outcome, considering we started with 100,000 only 2.5 years ago. And we have a second portfolio where we do a lot of trading. Trading portfolio has actually fallen behind the passive portfolio for the first time in 2.5 years. Our trading has always pushed this one in excess of the passive one. However, in the last 2.5 years, the Bitcoin miners have divided into 2 camps. One is the HPC AI camp, where they're pivoting into the artificial intelligence infrastructure, and those companies are your Cypher Mining, Iris Energy, TeraWulf, and Hut 8. While the pure play miners, the Marathons and the Riots and the CleanSparks, these companies continued with only the Bitcoin mining. And in the last 2.5 years, what we've really got is that the pure play miners, which did incredibly well in the last 4-year cycle, they've fallen behind much, much more than the HPC miners. And what you see is now 2 tiers developing. But because of what's actually happened, to the point now that the pure play miners, the Marathons, the CleanSparks, and the Riots are also now pivoting a little bit late in the day, but they're also pivoting into the HPC. But the overall performance of the Bitcoin miners, while they haven't performed as a whole over the last 18 months or so, the HPC miners have actually been outperforming, and we can see this on the WGMI Bitcoin chart. And in the private member section, we've been following this particular chart, and this is the chart for the WGMI against Bitcoin. The WGMI are the basket of the ETFs for the Bitcoin miners against the Bitcoin price. So in order to read these ratio charts, the way to do it is that with WGMI coming before Bitcoin, so WGMI comes before Bitcoin, so this is what we call the miners, i.e. the WGMI, going down in relation to Bitcoin, going up against Bitcoin, going down against Bitcoin, etc. And as many people have noticed with the comments that we get from time to time, from this point here in the middle of 2024, as well as at the end of 2023, you can see that the miners underperformed against Bitcoin. And here, once more, they underperformed despite a little bit of a rally here, but we can see that there's been a real underperformance of the Bitcoin miners. And the danger with taking an opinion on these types of things is that unless you're looking at the charts, you really won't know where the reversal is going to take place. And the members here will know that we've been following this chart and looking at the trend lines, and we had a very strong inkling that with this trend line that was forming all the way here, that this is exactly where it was going to reverse. And since then, you can see quite clearly we've been on a run. While everybody's been hating on the Bitcoin miners, they've been quietly gaining a lot of ground on the Bitcoin price. You can see from the bottom there, which was in April, you can see that from the bottom there to the Friday's close, we're over 80% outperformance for the Bitcoin miners against the Bitcoin price. Now, that doesn't take away from the fact that the Bitcoin miners on the whole over the last 4 years haven't performed as well as Bitcoin, and that's fine. But what we're really expecting is that with the price coming down now on this trend line here, so we made a high at this point, hit the trend line for the first time there, second time, third time. And if you want to include this here as well, this will be the fifth time. And we know that with classical charting, fourth or the fifth time, price is going to more than likely, with a higher probability, going to break out. So while everybody was abandoning the miners here, the charts were telling us a different thing. And here, the charts may well be telling us that the miners are now going to outperform. Only time will tell. All we can do is read the charts and give you the insights. And if you are interested in the analysis for the Bitcoin miners, in a more detailed basis, as well as a further technical analysis on Bitcoin, we do that regularly in the private member section. We do that regularly in the private member section. As you can see here quite clearly, we do quite a lot of members only videos, which we're currently doing on the Wednesday and the Saturday, covering various topics, as you can see from the titles here. And also on top of the 2 videos that we do, we also post on a daily basis, that's Monday to Friday, after the markets close. What we do is a market update, which takes into account a lot of detail on a daily basis. And with the market coming up to the end of the bull market, information is absolutely key to make the right decisions. So if you want to make a more informed decision about what you're doing with your portfolio and your insights into the Bitcoin, or even the miners as well, you can get a further insight in the private member section, where we do a lot of these detailed analysis on a daily basis. There's no obligation to buy anything, and I think from the comments people think that there's an obligation to buy into the Bitcoin miners. I can tell you that many of the members are just there for the extra videos as well as the market updates, and more than half don't take part in the trading portfolio that we do, and more than half of the members don't even take part in the ratio trades that we do. And the ratio trades I'm talking about is that we move the funds from one Bitcoin miner to the other at the appropriate time by doing a technical analysis on their various ratio charts. And when it's the right time to move from one Bitcoin miner to the other, then that's exactly what we do. And since the beginning of 2024, when we started doing these ratio charts, you can see that the blue numbers here on the profit and loss, we've been doing quite a lot, over 45 particular trades over that period of time. You can see we've done incredibly well. We've had nearly a 95% success rate, and this is unprecedented in trading. The last one that we did concluded just last week on the 18th of August. So that was only a week ago, and the trade started on the 13th of August, and 5 days later we closed that trade with a 20% profit. It doesn't always happen that way. We might have to wait a few weeks, even a couple of months, before the trade actually concludes. But you can see that there are some nice numbers here, and those with a bit of patience will get the rewards, as you can see quite clearly. Like I say, you don't have to take part in the trades, you don't have to take part in anything, and more than 50% of the members are only there just for the videos and the extra updates that you get, just for the information. And if you're interested in joining the growing band of the private members, all you have to do is go below any of my videos, and you'll see the join button here, as well as in the description box. And if you're on a handheld device, you might not be able to see this join button below the video, but in the description box, you'll have this red button here where it says Bitcoin Miners Membership Join Link. If you click on that, you'll be able to join us here with no obligation. You can cancel at any time for the price of just one coffee per week. And if you are interested in the ratio trades and what we do in the member section in a more detailed way, you'll see this video in the description box below, and you can go into that and we explain exactly how the ratio trades work in this video here. Okay, I'm going to leave it there. I hope you found value in the video. If you did, then please do remember to like and to subscribe if you haven't already done so. And if you've got any comments, leave them in the comments below. Until the next time, take care, stay safe, and I'll see you in the next video. Bye for now.